Ladies and gentlemen, good day and welcome to the V-Guard Industries Limited Q1 FY23 earnings conference call hosted by PhillipCapital India Private Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Deepak Agarwal from PhillipCapital India Private Limited. Thank you and over to you, sir.
Good afternoon all. On behalf of PhillipCapital, I welcome you all to V-Guard Industries Limited Q1 FY23 earnings call. Today we have with us management represented by Mr. Mithun Chittalapalli, Managing Director, Mr. Ramachandran, COO, and Mr. Sudarshan Kasturi, CFO. Without taking much of time, I would like to hand over the floor to the management for their opening remarks, post which we'll be open the floor for Q&A. Thank you so much, and over to you, sir. Thank you.
Thank you. Thank you, Deepak, and thank you, PhillipCapital, for hosting this call. A very warm welcome to everyone present, and thank you very much for joining us today to discuss the operating and financial performance of our company for the first quarter of financial year 2022-23. We are pleased to report a robust start to the fiscal year, with the consolidated net revenues of 1,018 crores in Q1, carrying forward the momentum from the previous quarter. This marks the highest ever revenue for us in the first quarter, and is a successive quarter with revenues crossing the threshold of 1,000 crores. We have delivered 80% YOY revenue growth this quarter, albeit on a low base given the impact of the second wave of COVID-19 across the country last year. Consumer demand has held up despite significant price increases during the last 4 quarters. While electricals and consumer durables segment continue to report strong growth, the electronics segment has also stepped up to deliver an improved trajectory this quarter. During the quarter, we witnessed a broad-based contribution from both South and non-South markets that witnessed YOY growth of 68.2% and 95.6% respectively. With a near doubling of revenues from the non-South markets compared to the previous corresponding quarter last year, they contributed almost 47% of the total revenue in Q1, higher than 43.2% last year Q1. The sustained growth in the non-South markets bodes well for the progression of V-Guard as a strong nationwide brand characterized by a more diversified revenue profile. On the product side, the electrical segment, which is our largest revenue contributor comprising of wires, pumps, switchgear, and modular switches, we registered a growth of 60% YOY. In the consumer durable segment, where we market fans, water heaters, kitchen appliances, and air coolers, Q1 revenues doubled, registering a growth of 99.7% YOY. In our electronics segment, comprising of stabilizers, switches, and inverters, we improved traction during the summer months to achieve a growth of 90.8% YOY. Input prices are still higher on a YOY basis, and gross margin in Q1 FY23 was 29.8% vis-a-vis 33.0% last year Q1. We expect this to recover to normative levels in the next 1 or 2 quarters. On a quarter-on-quarter basis, we have witnessed a slight improvement in gross margin as the price actions undertaken in prior quarters for some products have now flowed through the distribution channel. At the start of the quarter, we undertook further price action of around 3% across select products. However, as we witnessed the commodity prices peak out, it obviated the need for further pricing action, especially in the consumer durable segment. We are closely monitoring the situation, and the slight easing of commodity prices is helping to address the gaps in select categories where the complete transmission to the end consumers had not fully been undertaken. The EBITDA margin was at 8.1% during the quarter, has declined on a Q-on-Q basis as significant drop in copper prices during June affected the margin for wires, and this is likely to extend some more impact in Q2 as well. With the risk of supply chain disruptions minimizing, we have started to reduce inventory levels. We had a strong positive cash flow for the quarter. We believe we are well placed to meet consumer demand over the coming months, and this will enable us to get to normative inventory levels, resulting in stronger cash flows from the business. With that, I conclude my opening remarks. I would like to thank Philip Capital and Deepak Agarwal for hosting this call, and would like to ask the moderator to open the floor for Q&A. Thank you.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on your touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Rahul Agarwal from InCred Capital. Please go ahead.
Yeah, hi, good evening, and thank you for the opportunity. Just three questions very quickly. Firstly, on the ECD, Mithun, I thought the growth was very strong. Could you elaborate a bit which category did well, and what's the outlook on ECD margins? They're still hovering in single digits. I'm pretty sure because of price hikes and raw materials coming down, the margins should actually track back. So any comments, please?
So ECD, the two large categories in ECD is fans and water heaters. Fans had a pretty strong quarter because of a very good seasonal demand in the first half of the quarter. However, the demand in June was slightly subdued. Water heaters also had a very good growth, in the first quarter, but it would have been on a lower base.
And on the margins, Mithun?
Margins, like we said in the opening call, a lot of the commodity prices have started to correct, and the correction is ongoing. So we think that there is some respite for us. I think from Q3 onwards, we should start to see the margins normalize.
Okay, got that. Second question was on this acquisition of the balance 26% in Guts Electromech. Could you just help us recap what is this about, and what does this company do, this subsidiary?
Yeah, Ram, you want to take this?
Yeah. So Guts, is a company which is in the business of switchgears, and we had acquired them as part of building supply capability for V-Guard. And at the time that we had acquired the company, we had structured the transaction to be able to acquire 76% upfront, and the remaining 24 was to be acquired after 26. Yeah, 74-26. The remaining 26 was supposed to be acquired after 5 years. So I think we are now fulfilling the last leg of the agreed transaction by acquiring the remaining 26%.
So what is the cost for this? And this is like manufacturing facility for switchgears, is it?
Yeah, this is a manufacturing facility for switchgear. Yeah, this company was in the business of switchgear manufacturing and sales and supply, and we had acquired the company to secure switchgear supplies and to support the growth of the switchgear business of V-Guard.
And what is the investment for this 26%?
Sorry, I could not understand your question.
The investment needed for acquiring this 26%?
It's about 6.5 crores, I think, Ram?
Yes, Mr. Investment, is it? Yes, yeah, 6.2 crores. Yeah.
6.2 crores.
Oh, okay, got it. And lastly, just a bookkeeping question, other expenses at 145 crores for
shareholders. So definitely the growth prospects are very good. We are setting up 2 factories, one to manufacture inverters and one to manufacture battery, and we're hoping that in the next 18 months they should come online, and that will really improve the competitiveness for V-Guard products. And today, we are just having a 3% share of a 12,000 crore market in inverters, and we can definitely improve that.
Understood, sir. So also, if you could spell out how exactly lower copper prices have impacted our margins in the electricals vertical. Is there any inventory write-off or inventory revaluation also that may have taken place, and what could be the quantum of overall impact of low copper prices?
So just in month of June, we had a write-off of about 10 crores would be the impact of copper crash. So that has impacted the results by about 1% in EBITDA margins for the whole organization. So mainly coming from wires.
Understood. And will we be still carrying some high cost inventory, and consequently should we estimate some impact flowing through to second quarter as well?
So I think what could happen is some impact will be there in the month of July, but August and September, the company should get benefit of the lower cost input. Sudarshan, you want to supplement this?
No, that's fine. Nothing to add.
Understood. And so my last question is that you have referred to coming back to normative margins in let's say 1 to 2 quarters time. What do you consider as normalized margins for the company? Should we look at something like 32% odd?
Yeah, 32.3% of gross margin is about what we are talking about.
So pre-COVID margin is what we intended. That's about 32%.
Great. Thank you so much, sir. Thanks, sir.
Thank you. Next question is from the line of Charanjit Singh from DSP Mutual Fund. Please go ahead.
Hello, sir.
Yes.
So first of all, on the fan segment, especially if you can highlight now what is the mix for us in terms of premium versus economy. And, we had set up the capacity to ramp up our, premium offering. How is that scaling up? And from in-house manufacturing perspective, what proportion is right now being catered by the in-house manufacturing in fans segment? That's my first question.
Yeah. Ram, you want to take this?
I didn't get the question fully, but I think, can you, sorry, I was reading something. Can you kindly repeat the question again?
Sir, in the fan segment, premium versus economy, what's the mix right now for us? And we had also, set up a plant where we wanted to, manufacture more of premium fans.
Yeah.
How is that scaling up? And what is the proportion of in-house versus outsourced, manufacturing within the fan segment?
Sure. I think the later parts I did certainly hear. So I think the manufacturing initiative is going well, and I think we are close to we expect to fully utilize what I would say the core segmental capacity. The capacity is divided into 2 parts. So I think the major part which is related to we plan to fully utilize. So I think as far as the manufacturing shift is concerned, that's going well. Most of those fans are in the premium segment, and therefore the premium segment is significantly expanding in relation to the popular segment. Yeah. Now coming to what is our ratio, I think now we should be at about 40% to 50% on more 60. Oh, premium. Yeah, 40 to 50. Yeah, 40 to 50. We should be in the region of 40 to 50% on in the premium segment. This should get better as we move forward. Yeah, particularly with the BLDC coming in, and also the energy efficiency part also coming in. Yeah.
Okay. Sir, from water heaters perspective now, what will be our market share, and how is that market, shaping up in terms of the competitive intensity going forward?
See, we don't want to give out any market share numbers. All we can say is that we are doing extremely well in the water heater business. We had lost some shares, in FY21 and FY22 we regained some of that share back, and FY23 we are, growing from there. So that's all we can comment as of now.
Okay. And so lastly, from my side on the pumps market, if you can give some color in terms of how the outlook is there for the pumps market, and what is the kind of price increases which you would have taken, especially in the pumps market, and how is the competition coming from the unorganized segment in this segment?
So pump is part of the electrical basket for us, but it's not a very large category. It's probably about 10% of the total revenues of the company. Or a little less than that. The pump has been impacted in terms of huge input price increases. There have been multiple rounds of price increases. Some increases are yet to be passed on to the market, as many of the leading players have refused to, take, probably the last round of price increase. The good news is the commodities have started to correct, like iron and steel and all that, and copper. So I think pumps should bounce back. The volumes in pumps are impacted. The margins in pumps are impacted. Yeah, that's all.
Okay. So just lastly, if I have to look at overall from a consumer electricals, volume growth perspective, will you be able to share any outlook in terms of how is the volume growth expectation going forward for key product categories?
So I think, these numbers are outside. These are, we have a annual operating plan, but we don't give out the product-wise numbers. But the V-Guard, you typically targets a 15% growth in volume, and that's what we will be targeting this year.
Got it, sir. Thanks for taking my questions. That's all from my side. Thank you.
Thank you. Before we take the next question, a reminder to all the participants that you may press star and 1 to ask a question. Next question is from the line of Jay Shah from Capital PMS. Please go ahead, sir.
Hello. Congratulations, sir, for good set of numbers. Sir, I just wanted to know something, if you can throw some light on the business side, basically in the electronics segment and even the wires and cables. What is the kind of demand mix that we are seeing from? Is it more from the real estate, or there is more demand coming from those and the new kind of capex that is happening? So if you could give us some light on what is the mix like.
I'm guessing you're talking about wires, right?
Yes, wires, cables.
Yeah. So in the case of wires, V-Guard's project business is only 5 to 7% of total revenue. 95% of our cables go to the retail market. Having said that, the improvement in demand from the construction sector has meant that the brands which were, focusing on, B2B business have also, so the hyper competition in the retail business is slightly less now because the construction demand is decent. So that's one way to look at it.
Okay. Okay, sir. Thank you. That's all from me.
Thank you. Next question is from the line of Bhavin Vitlani from SBI Mutual Funds. Please go ahead, sir.
probably you would have seen the worst of for consumer durables in the last 4 quarters in terms of margins.
Thanks. But the second, if you could just highlight switches and the switchgear is an area that you have now identified, and we have seen that you have been successful in growing the fans and the geyser segment exponentially over the last 3 years. If you could just give us a roadmap on the switches and the switchgear segment, because you've done a couple of acquisitions also in this space.
Ram, you want to take this?
Yeah, I think we want to aggressively grow these two categories. I think we are relatively young. I think in switches we are about 3 to 4 years old, and maybe in switchgear about 6 to 7 years old. I think these two categories are growing well, and I think we are able to grow the category at a faster growth rate than our overall business growth. So I think we should be able to grow them at about 25 to 30% over the next 3 to 4 years, right?
Sure. So when is that you believe that this category could hit 500 crores? I believe currently it's about 150 odd crores.
I think you can compound it at 25% per annum, and probably you may reach to some number. But I think our base numbers may be a bit better than what you said. Yeah?
Great. This last question from my side, and pardon me if I'm repeating the question. In your press release, you mentioned there were some inventory losses. So would it be possible for you to quantify the kind of inventory losses which are there in the wires segment, and what's the kind of inventory that you generally carry for the wires as a segment?
Sudarshan?
Yes. The impact of copper drop during Q1 was about 10 crores. So it impacted margins by about 1% at a company level. Typically, we tend to have RM plus FG anywhere between 45 and 60 days.
Great. Thank you so much for taking my questions.
Thank you. Before we take the next question, a reminder to all the participants that you may press star and 1 to ask a question. Next question is from the line of Rakesh Roy from Insect Securities and Finance Limited. Please go ahead.
To which region do well?
We can't hear you.
Mr. The line has been disconnected, so we will take the next in line, and that is Mr. Keshav Baradia from Phillip Capital. Please go ahead.
Hi, sir. Thank you for the opportunity. So just to know why the margins in the ECD business got impacted, and also another question is how do we see the in-house manufacturing share going forward? Like let's say in 2-3 years, what do we see? How much can it go from the current 60%?
So the ECD margins have been impacted mainly because of the fan business. I think the fan business has been the most one of the most impacted categories. Primarily because most of the fans plus and competitors are aluminum fans, and basically the component aluminum had shot up significantly after the Russian invasion of Ukraine, as Russia is one of the major producers of aluminum. And now I think the aluminum prices are coming down. So I think the durable margins should improve. So this is one reason. Second is, we are relatively newer brand. If you look at fans, kitchen appliances, apart from water heaters, our market share in consumer durables are quite low. So obviously, being a smaller, market share holder and smaller brand in this segment will mean that our ability to pass on pricing can only, be there after the leaders in the segment pass on pricing. And typically, we may be carrying less inventory in terms of, strategic buying of raw material and all that, because we are small in those categories compared with some of the larger companies. So that's one of the reasons. But I think now the commodity prices are cooling down, and I think durable margins has already improved. Even if you look at Q1, and that will improve going forward.
Right, sir. And the in-house manufacturing share going forward in 2-3 years?
So right now it's about 60%. I think it will go to about 75% in the next 2-3 years.
Okay. Okay, that's very helpful. And so one more question, if I can ask. So how much high cost inventory are we holding right now? Like, is it worth 1 month, 2 months?
So like Sudarshan mentioned, if you look at the overall company, our FG inventory is about 70 days or 80 days. If you look at specifically copper and wire, it is about 60 days, including RM and FG.
Okay. And so, just another last question. Can you give the utilization levels for different plants?
Sudarshan, do you have these numbers, utilization levels?
No, don't have that data handy. We'll come back.
Okay.
We'll share it offline.
Thank you. Sure, sir. Thank you. That's all.
Thank you. Before we take the next question, a reminder to all the participants that you may press star and 1 to ask a question. Next question is from the line of Rakesh Roy from Insect Securities and Finance Limited. Please go ahead, sir.
Hello. Yeah.
Yes.
So my first,
Yes.
my question, sir, is, sir, can you highlight your non-south market performance, especially, sir, which region did well in this Q1, sir?
See, if you look at non-south, northern and western markets, had very good summer. Whereas eastern markets, there was intermittent rains right from May onwards. So both north and western markets did well.
Right, sir. Sir, any addition to dealer or distributor in non-south market in this Q1, sir?
We would have done it. I mean, we are not carrying any specific numbers with us, but like we said, our target is to add 3,000 to 4,000 retailers every year.
Okay, sir. So my last question, sir, any chance to take another price hike in near future? Or?
I think for most categories it may not be required because the copper, all the raw material prices have come down. Maybe there may be some small increase required in some parts of durables, but largely I think it may not be very large increases may not be required as what we believe.
Right, sir. Right. Thank you, sir. Thank you for my side.
Thank you. Next question is from the line of Hitesh Tonk from ICICI Direct. Please go ahead, sir.
Hitesh, are you speaking? We can hear you. No, the voice is very feeble. Something like price hike for quarter.
Am I audible? Hello, sir.
Please try again.
Yeah, I just wanted to know, sir, what is the price hike you have taken for the Q1?
Q1.
Price hike for Q1. About 2%, 2.5%. What 2.5?
Okay. Sir, one more question. Why is the employee cost is high on a Q1 basis?
Sorry, your question is on employee cost, is it?
Employee cost on a QOQ basis. Is that your question?
Yes, sir.
Yeah. So there are two factors. There is a variable pay accrual this quarter. Last quarter it was not required. So it's about a 7 crore difference on account of that. And the other one is increment kick in Q1. So that's the difference between the two quarters.
Okay. And sir, my last question is about kitchen appliances category, largely pertaining to our built-in kitchen category. So what is the kind of distribution are we planning going forward in this category, and what is our strategy to take it forward? Are we looking for some kind of market share? I mean, what is the current market share, if you can throw some light, and in future, what kind of market share are you planning to get in that segment?
So V-Guard is not present in the entire of built-in kitchens. We are only doing hoods and hobs. and they're primarily, today a traded, business. And we are selling only through Amazon and Flipkart, only to online partners. We are not intending to go to offline as yet. So yeah, and that's that's as far as the built-in part is concerned. It's very small today. It's not a very large business.
Okay, sir. Okay, sir. That's all from my side. Thank you, sir.
Thank you. The next question is from the line of Prashil Gandhi from Nirmal Bang. Please go ahead, sir. Mr. Bang, please go ahead with the question. Since the line of Mr. Bang is disconnected, we'll go for the next question, and that is from the line of Mr. Prashil Gandhi from Nirmal Bang. Please go ahead.
Hello, am I audible?
Yes.
Yeah. So just a question from my end. So what is the channel inventory at your channel partner? Is it high, low?
Ram, you want to take this? Channel
Inventory is more or less normal. Yeah, channel inventory is normal. So nothing abnormal at this stage. I think wire might be a bit lower because with the expectation of price reduction, the later part of the quarter, the sales were lower. So I think wire will be lower, but otherwise I think by and large I think inventory should be normal. Yeah.
Yeah. And you highlighted that there was some demand slowdown in June. So could you throw a bit color on that? Do you think it is some transitory kind of a slowdown, or there is?
It's related to weather. So I think so what we observed is categories which are weather dependent, right? I think they had a bit of slowdown, primarily stabilizer, inverter battery to some degree, and fan, right, and maybe pump. So a bit of slowness was there in these categories, but it is not across all categories. It's in these categories. Yeah? And mainly, the slowness was, in non-south.
And last question from my end. So do you engage in any kind of hedging for your raw materials?
No.
Okay.
We hedge forex, not materials.
Okay. Thank you. That's very helpful, and all the best.
Thank you. Before we take the next question, a reminder to all the participants that you may press star and 1 to ask a question. Next question is from the line of Bhavin Vitlani from SBI Mutual Funds. Please go ahead, sir.
About indigenizing TPW fans. So if you could just give us an update, where are we, what's the kind of investment and the capacity that we are looking to create in that sub-segment, and what's the kind of share that TPW has in the overall fans segment for us?
Sorry, the first part of the question was not audible. Can you repeat the question?
Sure. In the previous call, you had mentioned about indigenization of TPW manufacturing, which is currently being imported.
Yeah. So, yeah, got it. Ram, you want to take this?
Yeah. So, TPW would be, roughly about 25 to 30%, 30% of our business. You can take 30% of our business would be TPW. And main challenge that we had with the TPW was, it was imported. So, duty and, freight were major challenges, and that was affecting our competitiveness, and that's also reflecting in, the significant drop that you see in our consumer durable business, right? So, with that context, I think, and also to, ensure supply security, we've decided to invest in setting up a TPW facility. Yeah. So I think as far as the facility is concerned, we would be investing probably some 35 odd crores in plant and machinery for TPW manufacturing. Yeah? And obviously we will start small with a few SKUs and then progressively expand to address the category need.
Sure. What are the timelines that we are looking at, and when will the facility be ready?
Should be under 12 months, I suppose.
Okay, so till such time, margins for the fan segment will continue to be subdued.
So yeah, for TPW fans, it will be better than before.
So we are having two approaches. One is setting up our own factory, but even before that, we had invested in our own molds and dyes. And the India-made, TPW fans are already started to come into the market. So some part of the issues will get solved there. But I think our range will be a challenge. The entire range will probably we can do only, indigenize only once our factory comes in. So today we are only probably going to make the, most popular, SKUs. In India through a vendor in Hyderabad.
Sure. The second question also is on the fans. So we, after the new manufacturing, we kind of entered the decorative segment. So if you could just give us the timelines and the way forward, how are we looking to move up on the premium and the super premium sub-segment of that, and that also will require significant investment in brand building. So if you can just highlight the way forward on moving up the value chain on the fans segment, the ceiling fan segment.
Ram, you want to take this?
Yeah. So I think the investment that we have made in the plant is primarily focused towards premium and super premium categories. In fact, I think 85-90% of the output is targeted towards that, and 10% of the capacity is targeted towards mid-end fans. So I think and we hope to get to about 85-90% capacity utilization during the season, or probably even close to full utilization from coming season. So I think that the journey is progressing well for us. Yeah. Mainly we will be focusing with manufacturing only on the decorative segment, which focus on premium and super premium fans, right? We'll continue to source entry level fans from the market, or what I would say as the popular segment from the vendor ecosystem, and that strategy will continue.
Sure. Just this last question from my side. In the current quarter, it seems like there's a margin impact in the electronic segment also. So is that due to the inverter segment or stabilizers, and how do you see margin stabilization going forward?
Sorry, how are you saying that?
Yeah, there is. See, the mix of stabilizers sold in this quarter is very different from last quarter.
Okay.
And even the proportion of stabilizers and inverters to the total is also different. There is a significant mix impact.
Okay. So the margin decline that we're seeing is a function of mix impact and not decline in the individual category margins. Is that the correct interpretation?
Yeah.
No, I think there is some impact. So Sudarshan, there is some impact on the inverter battery business, in Q1. That is true. But there is also a larger impact of the mix in terms of the product mix and the category mix.
Okay, fine. So would the sustainable margin come back to that 17% that we have seen historically, or is this the new normal?
No, I think 17% is probably, what happened in Q1 and FY20. That was probably in a year where we had extraordinarily high sales, because summer was very good. So I think maybe 15 to 16% may be the correct electronic margins.
Sure. Yeah. Thank you so much for taking my question.
Thank you. Before we take the next question, a reminder to all the participants that you may press star and 1 to ask a question. Next question is from the line of Yash Khemka from Yashasvi Securities Private Limited. Please go ahead, sir.
Am I audible?
Yeah.
Yes. So I just had one question that how are you looking forward towards the demand scenario of electronics segment? And a corollary question to this that with copper prices reducing, how will the margins of electronics segment in particular will be impacted in forthcoming quarters? Can you throw some light on it?
Mithun, can I take this?
Yeah.
See, just to tell you, we are setting up two manufacturing facilities, one for battery and one for inverter and stabilizer. So I think, both these should help to improve our competitiveness and obviously will have a positive, margin impact, because the investment is hypothesized on getting a payback for the investment. So I think, that obviously, and obviously, as far as, inverter and battery are concerned, making this investment will help to improve our competitiveness. It will also help to improve our flexibility and therefore should help us to, grow the business better because we will be able to be more responsive, in the season to market needs. And we will have, more flexibility to address the market demand through a mix of own and sourced product portfolio. Yeah. So I think there will be favorable consequence because of our manufacturing investment on the overall health of the electrical and electronics business. Yeah. There is some amount of margin stress which is seen QOQ, but that is also because I think some of the impact of input cost increase, right, has been later in some categories. Like in the case of batteries, the lead impact has come later, whereas in some other categories the commodity impact has come much earlier in the year. So I think a bit of that is seen, but I think like in other categories, I think progressively as we go forward, as commodities correct, I think they should also get corrected. Yeah. Okay. There may be some marginal drop in like stabilizer or inverter, but that is consistent with the increase in input cost that has happened, and that should roll back as the input costs roll back over time. Yeah.
Okay, that helps. And so another question, that's how are you seeing demand in cables and switchgears in Q2? Like, is it still strong?
I think, as far as switches and switchgear, I think, as I think Mithun had said earlier, in general, I think, as far as the demand from the construction segment is concerned, it has been stable, and therefore, we expect to see continued demand. Having said that, our, incumbent market size and market position is fairly small. So as far as we are concerned, we believe we should be able to, post decent growth consistent with how we have been growing in the last 2-3 years.
Okay. Thank you. That helps.
Thank you. The next call is from the line of Nikhil Kale from Axis Capital. Please go ahead.
Yeah, thanks for taking my question. Just going back to the electronics margin. Now you talked about the new facilities that you're looking to put up for inverter and batteries, and that could kind of improve your competitiveness. Just wanted to understand, would it be fair to assume that given that you will kind of see margin benefits, and if that is the case, would the strategy be to retain the margins or pass it on to consumers and try to gain incremental market share?
So if you look at the inverter and battery business today, V-Guard is not very competitive in terms of pricing. So some of those margins will be passed on and some of it will be retained. So, but you will still see some margin improvement. That's what we expect.
Okay, but then would you then still stick with like the 15 to 16% kind of a range for this segment over the medium term?
You're talking about electronics?
Yeah.
Yes, electronics anyway, I think, we should expect a 16% margin. But that is we should go back to the 16% margin in my view. That is possible. Today, I think V-Guard's, products are not very cost competitive, especially in the battery segment. where we are outsourcing the production.
Okay, great. And then just secondly, as we kind of move towards more in-house manufacturing, again from a company level, how are you looking at the kind of margin improvement? Is there any target that you're looking at in terms of incrementally you want to take your margins to a particular level over the next 3 to 5 years? Any color on that front?
So I think as we have always mentioned that we will look at margin improvement from there on, and I think that is possible with these initiatives. But these initiatives will take 2 or 3 years to gain fruit, because in the first 1 year and 1.5 years maybe there will be excess, there will be a lot of inefficiencies in the manufacturing process, which will then be streamlined going forward. So yes, we have seen that happening, and whenever we set up a plant, it is with a clear IRR, and it is with a clear return that we do that with a clear margin improvement program for the category.
Okay, got it. Thank you.
Thank you. As there are no further questions, we have reached the end of question and answer session. I would now like to hand the conference over to Mr. Deepak Agarwal for closing comments.
Thank you, management, for giving a valuable time for this call and allowing us to host this call. And thanks everyone for joining this call. Management, any closing remark that you want to make?
Nothing, Deepak. Thank you so much for hosting the call, and thanks to Phillip Capital. Thank you.
Thank you so much, and thanks everyone for joining this call. Thank you.
Thank you. On behalf of Phillip Capital India, that concludes this conference. Thank you for joining us. You may now disconnect your lines.